Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. We're 1 year later with Tad Smith. Tad, thanks for joining us.
Tim, great to be here. Last time we were here in these very seats was November 5th in the evening, the night that Donald Trump got elected.
Yeah, we didn't know the outcome yet, but...
Right. But...
We were here.
But we were here. Exactly.
So the first question is, do you still like the stock? And we're referring to MSTR.
Yeah, which, by the way, has since had a name change, right?
Mm-hmm.
Yeah. So what was formerly called Microstrategy, I'll call it Strategy, has had a rough year. I mean, year-to-date performance is 5%. I think the last 12 months performance is 38 or 39%, plus or minus. I do own the stock. Interestingly, the other day I bought Strike, which is the convertible preferred share. And I bought it because I like the Bitcoin-backed 9% yield on it. And yet it's convertible into Microstrategy, which now Strategy shares. And so I sit there and thought about it. I'm getting paid 9% to wait and have the opportunity for MicroStrategy to get through its current doldrums, get through the sentiment, see Bitcoin reverse, and also begin to think about creative ways to leverage its balance sheet, both on the asset side, a la the Bitcoin, as well as the very innovative things they're doing on the liabilities side of the balance sheet. So I bought some of that. I also bought, by the way, Stretch. This is STRC as a money market. I think that one's yielding, I don't know, it's like 10.5% or something. It's pretty nice for my cash account. So I'm going to amend I like the stock and say, I like the stocks. How's that?
Okay, I like
and
that.
Yes, I still own MSTR, the common shares. The performance hasn't been great this year, but I think that'll turn around. One probably has to be patient.
Got it. Are we in a bear market? And has this turned from a 4-year cycle to a 3 or 4 month cycle?
Yeah. Well, there are two questions in there. They're both good ones. First one, are we in a bear market? No. It's hard to say that we're in a bear market when we're, we're at 113 as we sit here and talk about it, which is 13,000 off the all-time peak. We did, have a little correction last week. We tested underneath 105. And bounced back. But it's possible that we could roll into a bear market. It's not my base case. I'm optimistic that we will continue some robust growth for a lot of macro reasons. Now, when you talk about a 4-year cycle, I assume you're talking about the 4-year Bitcoin halving cycle. Mm-hmm. On that, I have to say, I don't really completely understand the rationale of the 4-year halving cycle. Now, it's possible that if enough people, and particularly the OGs, believe in the 4-year halving cycle or think there's a possibility of it, we can create one by a lot of selling. Mm-hmm. But I think the cycles that are more interesting to me are actually liquidity flows and capital market cycles. And on that, there's no question that we are long in the tooth on this particular capital cycle or liquidity cycle. But it's also true that the Fed is on the sort of early part of its easing. And also China needs to do a lot of liquidity, and we need to refinance trillions of dollars of debt. And so I'm reasonably optimistic that on balance, the Fed is going to remain relatively favorable for a while. But it is liquidity conditions, they're on the cusp at the moment. So one has to be a little careful. So I guess I sound warmly disposed to, I guess I sound optimistic, but cautious. I'm careful. I'm watching the markets.
How would you describe sentiment right now? And in particular, maybe the Bitcoin Alpha conference that we both attended.
Oh, the Bitcoin Alpha conference. It's hard. I mean, this was amazing. It was in Santa Monica. There was one a year ago, which was sensational. This one was very good again. And it's very hard to leave that conference and not be bullish. All the structural macro factors are in favor of Bitcoin. Now, let's make a subtle distinction between people who trade Bitcoin and people who are long-term, either dollar cost averaging or hodlers, for lack of a better way to say it. And in the category of traders, I'm talking about I'm excluding the people that are concerned about taking some lifestyle chips off the table because they're trying to time a cycle. Let's leave them out. If you have a long-term or even a medium-term thesis on Bitcoin, as I do, you can't help but be insanely bullish. I mean, it's just everywhere almost every single piece of data you look at is just bullish. And the Bitcoin Alpha conference was literally well named. It was Bitcoin Alpha. It was great.
Yeah. How do you enjoy that format versus sitting in a large crowd?
So for those for the vast majority who didn't attend, it was almost like a sort of roving living room situation where each of 4 different groups would be doing a topic, quantum, does that threaten Bitcoin? Liquidity, up or down, all these different things were going on, and you could sort of float around among them. And it wasn't so much a single speaker broadcasting and everybody else listening. It was very curated. It was almost, there was a person who was responsible to facilitate a conversation. There was a dialogue, and the group of individuals there were lots of people that we could learn a lot from. So from my perspective, I learned a lot, and I came away bullish. It was great.
Awesome. What's the relationship right now and maybe a few years out, or even less than a few years out, between AI and Bitcoin?
Interestingly, the AI Bitcoin connection was discussed, actually, Bitcoin Alpha. And of course, there are lots of people in that space that are breaking great ground on it. One of my very favorites is Jordi Visser. I think he's done a great deal on that too. But if we step back and we think about it from the perspective of AI, everything else being equal, should expand the knowledge of pretty much all things. All human knowledge should be expanded, which means that anyone that has a moat driven by scarcity, either scarcity of knowledge or scarcity of resources or things like that, should face competitive intensity and erosion. In other words, AI makes it possible for the replication of goods and services very fast, and particularly scarce knowledge resources. That's going to turn the economy upside down, given long enough time to do it. And so when I look at that, I say, well, what is it that's truly scarce and truly digital? And that's Bitcoin. So setting aside whether Bitcoin is the best set of rails for an agentic AI economy, we can debate that, but I certainly think it's better than the current system by far. Setting aside whether Bitcoin evolves or faces tech threats such as quantum or other things, which I think, it's too soon to opine on that now. There's a lot of good research on it that suggests there needs to be some people looking at it pretty carefully and thinking about it. But by the way, AI is going to help that too, both on the defense and the offense side. So I look at it and I say, Bitcoin is a very, very constructive asset for my portfolio in a world that looks like that. And what's interesting is it's easy to say that out there sort of in the ether. It's what's really interesting is what isn't a particularly great asset. For one thing, I'll point out, and again, hat tip to Jordi Visser and others on this particular point, and also Julian Battelle and Raoul Pal. Software businesses, the traditional software businesses are driven by essentially knowledge scarcity, in effect. And AI should significantly erode those barriers, and very quickly. And when you think about how much of the S&P 500 is driven by fundamental software returns, it's not small. So not to mention the Qs, the NASDAQ 100. So I sit there and I think, well, the SPY and the QQQs have been performing very well recently, and I am thrilled with that. But if I look 5 years in the future or 10 years in the future, and I say, where do I want to put money for the next 5 or 10 years in my portfolio, I think Bitcoin, with both the secular technology adoption, the debasement trade on top of it, but also the scarce digital quality of it as a store of value, to me, is a really attractive proposition. And that's all within an AI context. I like the stock. In this case, it's not a stock, commodity.
What has the last year been like at NYU Stern? You've brought in some AI.
I've had a great time in NYU Stern. Yeah, no, I'd taken a couple of years of hiatus after 22 years of teaching, and I've taught a new class this year on AI, and it was really AI and art. And I'm using art not because it's a business school. It's for second-year MBA students. The reason I chose art is because that is the ultimate province of human beings, the creative, literally the creation of things that are expressions of humanity and emotion and authenticity and all these different things. And so if we could talk, if I could go on this learning journey with the students that credibly connects all the really big questions about AI in that, I thought we would stir it up. And indeed we have. And by the way, lots of things have sort of been news flashes for me. One is when you not only don't ban students from using AI, you require that they use AI, and you yourself teaching it use AI. And then by the way, you have to grade. How do you grade papers that have, an IQ floor of 160 and are experts at answering any possible question? It presents a radical proposition. And so I think, we talk a lot about how work will change in a world of AI. Education is going to change even more radically. And that to me is an incredibly positive thing for the democratization of knowledge and the abundance of education. So I'm excited about it.
How do you grade papers or exams?
Well, it's funny you mentioned that. Tonight is the last class, and the essays are due at 6:00. And I will confess to saying that I used ChatGPT to help design ChatGPT-resistant take-home essays. Because I knew they were all going to use ChatGPT or any of them, Claude, any of them. So I actually got AI to help create essay questions that were resistant to answers by AI. And I don't have the exams in tonight yet. They're coming in at 6:00 tonight. But I can't wait to read them. Hard questions that left me sort of floored. And I, of course, curated them and I picked ones I liked and I tweaked them here or there. But it was AI versus AI in this. And the objective of the test was to get our students to use AI in a constructive way that brings the most out of them as human beings using the most powerful technology human beings have ever created. And that's Bitcoin.
On a scale from Bernie Sanders to Tom Lee, where on that
First of all, is that even a
be?
scale? I don't know. How many dimensions would that scale? First of all, I guess you'd have to map universes, right?
Yeah.
I don't know.
A few
I have
universes.
no idea.
You
asked because they were just here in the studio, I guess.
You're here in somewhere in the capitalist region?
Oh, I'm a great friend to capitalism, yes. Enthusiastic fan.
Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Join us at The Win in Las Vegas, February 23rd through the 26th, 2026 for Bitcoin for Corporations. Use code KOTZ when you grab your tickets at strategy.com, and we'll see you there. What is going on with Bitcoin Treasury companies? You have pipe unlocks, you have some stocks down a lot. We'll just leave it at that. 90+%. I still have conversations with private companies that are still planning to go public.
Yep.
Bitcoin only sort of treasury companies. Is there anything that is like an obvious, moving forward, you could pivot and do this, or you could have done this differently? Or, I mean, there's a lot of sharp people in the space.
Very bright people are in the space.
But interesting times to navigate. Any this would make sense to me as far as maybe doing things differently, or any aha moments, what are your takeaways?
Well, if I step back and survey the field, the questions I would ask are age-old questions in business, which is, how do you differentiate company A from company B? What is the competitive access of company A versus company B? How you think about company A has a moat versus company B. These are all basic things. I mean, this is Michael Porter and predecessor stuff. This is early 20th century stuff. And the idea that the number of Bitcoin Treasury companies would multiply, by more than an order of magnitude, by 2 orders of magnitude in a very short period of time, and there would not be a glut of them versus the desire on the part of investors to put money into them, confusion among investors about where to put their money and how A, B, and C are different, meaning what's the moat, what's the differentiation, what's the competitive intensity. All of that, to me, it's to be expected that we would have a collapse in the multiple of net asset value. So I think what you're experiencing is the supply curve for these things has shifted way out. And there is not yet a narrative that defines how A, company 1, company 2, or company 3, company A, B, or C is different. Now, there are some significant standouts. Obviously, we started our chat about talking about strategy. Strategy, listen, it's hard to say never or ever. Those are such long time zones. But it's hard for me to see anyone catching up to Strategy's treasury bank of Bitcoin. It's just phenomenal. And whether you are a fan of Michael Saylor's, count me in that list, or not, you have to admire the fact he moved quickly and decisively to create a hoard of Bitcoin that is literally a force of itself, but also an asset on which the optionality about what he can do with it has gigantically multiplied. Now, he's demonstrating that by issuing securities against it, but I wouldn't rule out all sorts of other interesting pivots. He's pivoted multiple times in the past. And insofar as other kinds of Bitcoin Treasury companies can find specific niches or countries that are have unusual characteristics or particular qualities that make them unique and differentiated and competitively exciting to investors, I think they will do better. That said, what would be generally helpful is a little bit more enthusiasm for Bitcoin overall. This has been a tough year for Bitcoin. Really it has. When you step back, look, it's had sort of 20+% returns, which are respectable, but not to Bitcoiners. I mean, they seem like, and moreover, it's been a painful chopsolidation for, I love that James Check word, chopsolidation. I think a hat tip to James Check for that. It really describes it. And so we're both frustrated and bored and tired. And we were expecting October, and we got, I don't know what last week was, but it was not great. And so, we might, we're entering the seasonal excited part of a long, tiring year. And we want to see some fireworks, and we haven't seen any fireworks. If we saw any fireworks, it was a flash crash 2 Fridays ago, and that wasn't much fun.
Do you want to talk about that a little bit? The flash crash, and also just...
Yeah, it was good to be in Bitcoin rather than the others.
Yeah.
Better to be in gold, but good to be in Bitcoin.
Let's talk about gold and the outperformance versus Bitcoin and Voltober.
Voltober? I like that, Voltober.
Is that
so do we drop Uptober and add in Voltober? Okay, Voltober.
Is that bullish in your mind to have the vol increasing?
It's very good to have the volatility return. It doesn't feel great when it goes down. It never does. But the death of these assets from the investment perspective is volatility, because we all know that volatility is vitality. You want to talk about gold?
Yeah, let's talk about gold.
Up.
Gold is up.
It's rolling over today. It's actually off. It was off 6% a few minutes ago. But that's in my mind, that's to be expected. It's had a parabolic run, and gold has had parabolic runs in the last 30 years, once, I think twice, maybe once, certainly once, but maybe twice if you go back 50 years. And, it gets kind of tired at the top, and it needs to take a healthy break. And to see it rolling over 6%, Bitcoin, as we came into the studio today, was up 2.5%. So maybe some portion of that is benefiting Bitcoin, but gold has a lot of its independent. I mean, it's a much larger asset, and it's got a lot of its own dynamics going on, but not at all surprising to see some portion of it coming off the top, because it's had a run.
Is it fair or appropriate to make the comparison between gold and Bitcoin? Gold is such a higher market cap, call it 10
Gold
times.
Is huge, sure.
10 times bigger.
Absolutely.
And it's up more than Bitcoin on the year. I mean, what does that even say?
Maybe up more than all of Bitcoin's size on the year, for sure. Yeah, that's what you mean.
I mean, it's just incredible.
Yeah. So what does it say?
Is it appropriate to compare the two?
Of course.
If you have this asset that's 10 times bigger.
Of course.
With more
Well, you can compare anything to anything, but you should recognize the differences. I mean, Bitcoin, as I said earlier in a different context, has a strong secular tailwind driven by technological adoption. And sure, it helps with debasement. It's kind of a nice thing with debasement. It helps with, it's certainly liquidity dependent in the short term. What percentage of it is liquidity dependent versus technological secular adoption is an interesting question. It's got a lot of other dynamics going on, but it has, and gold, by contrast, has its own use. It has a much lower level of volatility. It tends to have a strong risk-off basis. It's got a floor from central bank buying. So they're different assets, but they both have qualities of stores of value that make it possible for people to link them in their mind from an analytical perspective. And by the way, I have both gold and Bitcoin in my own portfolio. And they work out very well. Today, my gold is down and my Bitcoin's up. And when you step back and look at it from a finance perspective, if you get the mix right, you can actually improve your overall Sharpe ratio, which, of course, as you know, is the unit return per unit risk. So I think they're a nice mix.
Do you hold any S&P or Mag 7?
I'm not holding the SPY at the moment. And I really haven't actually this cycle much in the last couple of years. No, I do own one of the Mag 7. I do own Tesla. I like that stock too. I think he's got a lot of really, really interesting narratives that have yet to play out in the stock price. I know it was in the low 280s and it's now mid 400s. So it's had a nice move already. But when you look into the future between energy, when you look at autonomous driving and you look at the promise of humanoid robots, I get very excited about it. And what's particularly interesting, and I did a lot of work over this on the weekend. Interesting, funny you asked this, about how to add how much Tesla should I add to Bitcoin, how much Tesla should I add to gold, how much Tesla should I add to other things in my portfolio. strike, for example, which I talked about a minute ago, to get the right balance of risk and return. And it turns out Tesla's was, for my portfolio, a really quite healthy addition, both in narrative, AI, humanoid robotics, that sort of thing. But also it had a really nice mathematical and financial quality in terms of expected return, and improved my Sharpe ratio while very slightly improving the return overall of my portfolio. So it had a beneficial effect to get into the wonky finance of it.
Would you say that Tesla having that Bitcoin on its balance sheet was a significant contributor?
No,
really?
I just think, I mean, to me, I try to separate leverage Bitcoin equity plays, which are really about the financial markets, from, what makes sense to put in your treasury. And Bitcoin to me is a very reasonable thing to put in your treasury if you think it's going to perform better than for long-term treasury. I mean, not short-term. If you think it's going to perform better than T-bills. And Tesla had a lot of extra cash, and I think they put it in Bitcoin. And by the way, I think they're not unhappy with that, although they've made some adjustments to it over time.
This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin Treasuries perform against the market. Upgrade to Premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of Premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon. When we were talking earlier, you pulled up a chart and we were talking about OGs selling Bitcoin.
Yeah, this really belongs in the "Are we in a bear?" question.
Yeah, we're skipping around a little bit.
So this goes back to my favorite analyst from Down Under, James Check. Done a lot of work on this, and you can go on and find him on Twitter. And he looked at and did some great analysis, and basically what he concluded was at the most recent snapshot, which is just a few days old, we were selling about $2.7 billion a day. It doesn't sound quite right. It was a heck of a lot of sales per day.
Maybe around 3.5.
Yeah, it was a lot. It was a whole lot. At any rate, it's on Twitter. I strongly encourage you to check it out. And he put the charts right out there. They're super. First chart shows that the amount of daily selling is significant. The second chart shows that the average holding period of the people who are selling, meaning at the time Tad sells his coins, how long on average did he hold them? And if my memory serves me correctly, in 2023 or 2 years ago or 2.5 years ago, it was 23 days, and now it's over 100 days, which was fascinating. Again, my numbers might be quite right. I can't remember exactly his charts, so you just have to go look at them. And then what it really said was, and the realized profits on long held were pretty strong too. So bottom line, there is a lot of truth to the fact OGs are providing a pretty constant high level of selling in this market. And who can blame them? It's at 113,000. And some of these guys got in at like very, very, very low rates. They're sitting on billions of dollars or hundreds and hundreds and hundreds of millions of dollars. And why wouldn't they take a little money off the table?
Why wouldn't they move it somewhere where they could take a loan out against it, or wrap it in an insurance policy, or do something to mitigate just paying all sorts of...
Well, this is a theoretical exercise, at least for me, but maybe not for you. If you're sitting on $2 billion worth of Bitcoin, moving $500 million into cash or to do something, lifestyle chips. I don't know what lifestyle chips means. Buy a sports team, whatever it is you're doing, that's understandable. And if you're sitting on $2 billion and you see the price get up well over $100,000 up to an all-time high, to look at that and say, I'm sitting on $2 billion, it could go down to I don't know what price, quantum's looming if I want to be concerned about that. What do I do? Well, maybe take a few chips off the table and do something else with it. Who can blame them?
But why not just take out a loan and not have that tax liability?
Well, because you still have the exposure.
Got it.
Yeah, meaning borrowing against your Bitcoin increases the volatility.
Got it.
Meaning of your personal net worth.
Yeah.
And if you're sitting on $2 billion and it's all Bitcoin, you already have a very high net worth and you have a lot of volatility in your net worth. So
Makes sense.
OGs, not surprising they'd sell a little bit. And by the way, when you're sitting on $1 billion worth of Bitcoin or $2 billion worth of Bitcoin, or most recently, what was Galaxy's great deal? Nova did an amazing deal of didn't he transact $8 billion or something in whatever it was? If you're sitting on $8 billion worth of Bitcoin and you're selling it, my guess is you have more than that.
Right.
A lot more than that.
Yeah.
It's not suddenly you woke up in July and decided time to sell.
Yeah.
Something else is going on, and my guess is you have a lot more. And so you're taking you're diversifying, or you're taking lifestyle chips off the table, whatever $8 billion buys you. I don't know, a sports team maybe, who knows?
Are you concerned about quantum?
Well, here's the thing. Quantum, in all of its versions, including, by the way, there's a different version, which is that agentic or recursive AI becomes so good, irrespective of quantum, that they can begin eroding some of the security of the math. To me, is a metaphor for technology, which is to say, do I believe that where there's a high economic incentive for someone very clever to deploy the world's greatest technologies to try to erode the security of financial assets, and there's a very high incentive to do that, by the way, among criminals and bad actors, that it won't be possible at the parabolic move that technology is advancing for someone at some point to do it? I think it's very possible. So whether it's quantum or whether it's something else that we're not talking about, I do believe that the security parameters of Bitcoin and others are going to have to get better with time. The good news is we have technology on our side too. The good guys have technology. The bad guys also have technology. So I think to talk about a Bitcoin that doesn't change and evolve as the threats grow is essentially going short on technology. Isn't that ironic? Isn't it ironic? One way to view that is if you believe that Bitcoin should remain completely unchanged because as it is, it does not need any adjustment, irrespective of the technology. Essentially, you're going short on the human ingenuity to be able to break it. I wouldn't want to take that bet. I go long on human ingenuity and I go long on Bitcoin, carefully thinking through how to grow and develop and make what is a pristine money even shinier.
Speaking of art and jewelry.
Were we speaking of art and jewelry? Speaking of jewelry, they got swiped at the Louvre last week.
I was about to ask.
Oh, yeah.
What's your take on that? I was reading about it this morning. Mm-hmm. A ladder truck and carving out a window on the second floor, and in 8 minutes they're gone. Obviously tragic in a real sense. What's your take on it? Maybe not like get more security at the museums, but like what is what's your takeaway and what's the impact of that when those things are never?
Yeah, well, when you look at what they stole,
yeah.
It was mainly jewels, and it was a series of pieces of jewelry that had significant gems in them. And so, the speculation I was reading was that they could pop out the gems and melt down whatever substance it is, gold presumably, or platinum or something, and just sell the pieces off for parts, and that's a way not to have it necessarily identifiable. But I hope they get caught, and I'm hopeful that it gets returned to the Louvre, which is, in my opinion, right up there with the Met, one of the greatest human treasure vaults in the world.
How does that work on that level? Would it have to be like a board of directors saying, hey, we need to allocate more capital to addressing some of these issues to make it at least more challenging for criminals, or?
I wouldn't want to opine on that necessarily. I will point out that the Louvre is controlled, I think, by the French state. And I have met the director of the Louvre, and she's an incredibly impressive person. And the chief of staff is I'm friendly with, and he's also a very thoughtful and very bright guy. And so I'm confident that they will sort it out. I will also say that there's one other thing to keep in mind. In things like this, often there is, an unwitting security failure of some sort. But very often it's a failure of imagination, right? Isn't it? Don't all these things seem to be ultimately failures of imagination? Some bold, clever set of thieves came in, highly motivated, and had an innovative new idea and thought nobody would notice, and nobody did. It's too bad. Yeah. But I'm optimistic that they'll get caught, and I'm optimistic that it'll work out well.
You said a bit earlier that maybe you never really subscribed to the 4-year Bitcoin halving cycle.
Well, I said I didn't understand why. There would be one.
Yeah. How about the power law?
Oh, yeah, power law.
Liquidity, things of that nature.
Well, I am a fan of liquidity. I
think we all are.
Well, I'm a fan of liquidity, and I understand. There's some very good thinking that it doesn't matter, but I have to say I'm going to sit with the liquidity folks. But I do believe one cannot underestimate the secular adoption, which is often modeled by the power law. Secular adoption is a very powerful theme, and it is crucially secular. But waxing and waning in between, maybe you get a little fluctuations up and down with liquidity, sure. So call me, I subscribe to both, happily.
So we're here 1 year later. Where are we going to be 1 year from now?
Well, 1 year from now, we're going to be...
across a few.
Yeah, 1 year from now, we're going to be in a very interesting election in the United States, right? We're going to be at the midterms. And I don't know where we're going to be. I am hopeful that the noise around tariffs and rare earths and the situation with China will resolve in a win-win. Both sides have strong incentives to fix that. I'm hopeful that Bitcoin will be higher. I'm hopeful that risk assets will not be bubbly, but in fact solid. I'm hopeful that the economy will remain strong. And I'm particularly hopeful that we are beginning to wrestle society with some of the many issues that are going to crop up as AI, the impact of AI begins to diversify and intensify. Hopeful.
Any closing thoughts?
No, it's great to be back. It's great to be back 1 year later. And I appreciated the invitation. Thank you.
Thanks for being here.